Hey everyone, Michael here. Today we're going to be talking about why the market is breaking down and how you guys can make some money because of it. It's been a very interesting few weeks here. I know I've been telling you guys I don't have a good feeling about the market, and we're kind of seeing those breakdowns happen right now, okay? So first of all, we're going to be talking about the Dow Jones and the SPY, and then afterwards we're going to be talking about Bitcoin and the Nasdaq because those of course are pretty volatile compared to everything else going on in this market right now. So let's start off with the Dow Jones and kind of just a totality recap of what's going on. We have a beautiful uptrend no matter what you guys are looking at. Beautiful, beautiful uptrends. This is because there's been so much stimulus pumped into the economy by the government that it's actually like just kept the market kept on going up and up and up and up after the disaster that was last year. Now, the downside, of course, to that is inflation. And if you guys are lower on the economic ladder, it is hitting you guys very hard. But if you guys are an investor, that's kind of who the government cares about. If you guys hadn't noticed, you guys are doing very, very well right now, but we're starting to see an overall slowdown in the economy. Just a tad, enough to make people worry. If people worry, they lower their positions just a tad, and that's what you guys are seeing right now. So you guys can see on the Dow Jones right here, we're seeing a breakdown, and we're also breaking down below the 20-week moving average. To me, the 20-week moving average doesn't symbolize too much as far as, oh my gosh, we're going back down. For that, I really want to point you guys to this MACD right here. These are my custom settings. I'll link a video if you guys want to follow them. You guys can. But these are my custom MACD settings that kind of helped me get away with a lot of false signals in the past. If you guys are used to having the MACD on your charts, you guys will notice it can give a lot of false signals. What we're about to have right here is a crossover. That's going to happen at the end of this week, and that's going to be very, very bad for the next few weeks here. The only other time we've had one of these was in March, and I didn't use that one specifically for one reason and one reason only. It was in the middle of a crisis. You never use indicators like this that lag in the middle of a crisis because once the crisis is resolved, we usually spike back up, and that's what you guys saw right here, almost into this kind of ugly shoulder, head, and shoulders that broke out and led to that one last pop that we saw earlier. Now, because we're breaking down, that next level of support that I want you guys to focus on is just this level of support right here. You can see this order block on your screen. It may look a little bit of a darker blue. It's kind of around $33,000 to $34,000. I would probably just break it in half and say $33,500 because I don't think we're going to have an easy time holding this 50-week moving average. I think next week we're probably going to have a bounce in the beginning of the week, and then afterwards we start going down hard, breaking below the 50-week moving average. The last time we broke down below it, you see that nasty move? That's usually what happens when we deal with moving averages. The Dow Jones has been a little bit more different because we've been going a lot more sideways, to be frank. You look at the SPY over here, it's been much more of a up, 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 up. Dow Jones, sideways, 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 break out of that head and shoulders, and up we did go. Now, as far as the SPY is concerned, we're looking at another huge bearish move on the downside here, but that next level of support isn't as close. Remember, the Dow Jones is breaking down. That next level of support, because it hasn't been going up as much, is right around that 33,000, 33,500 level. The SPY, it can come down a lot more because, first of all, it hasn't had the major breakout like the Dow Jones had. It's actually still in the uptrend. It's still doing okay. We can always break out on the upside if things turn around, but right now it just doesn't feel like we're going to be turning around with the MACDs and the oscillators, the RSIs, all pointing to coming back down or having some bearish divergences, which we can talk about another time here. The big level of support for the SPY is way down here below $400. We're at $431 right now. That would be an ultimate disaster. That means the Dow Jones in that situation would actually probably come back down here towards 32,000. More realistically, hover above that yellow line right there, which is that 200 weekly moving average, Now, as we most likely get closer and closer over the next couple months, we are going to be looking at breaking down below this 50-week moving average as well. You guys can see all the choppiness that goes around when we are dealing with these moving averages. But if you guys like to day trade, that is where you guys are going to make the most of your money. Right now, it's actually not too crazy of a time to start loading up on SPY puts, but like I said a couple weeks ago when I told you guys, hey, I would be buying them for the long term here, these SPY puts are going to have to be a minimum of a month out, okay? That way you can wait for some consolidation, some bouncing around, and then on today when we have those flush out days and your puts go up like 100, 200%, you just sell. You can hold on longer if you want to, but you should at least start scaling out some of them at this point. Now, once this breaks down, we are going to see the overall market come down a lot harder, but don't be afraid to see choppiness right here before we move down. That choppiness is where I would re-enter on some puts if you guys have already done that. You guys probably saw these, MACDs, and I've been talking about it for a while here, and you guys have probably played it so far so well from what I'm hearing from you guys. But just be careful. That next level of large support as far as order blocks are concerned is all the way down here around $400. If you guys are looking for maybe a dip buy opportunity, play around with the 50-week moving average here, especially on this breakout that we had right there. That's kind of around 415, maybe close to 420. That'd be a good zone to have a short-term pop where you guys are holding for 2 to 3 days. Gives enough time for CNBC to say, oh my God, the market is turning around, only for it to hit them again and drive everything down. Remember, if we come back down to here, or if the Dow Jones comes back to here, and we're going to talk about the NASDAQ in a second, that does not mean we've come anywhere close to the lows we saw in 2022. We didn't get that low, okay? We need a recession to get down to that low and fall down below that. As long as the economic data is okay, you guys don't have to think about breaking back down below those levels. But for now, you can be, or at least I'm pretty certain, we're going to continue to come down over the next few months, choppily of course, but we're going to hit some of those support levels, and it's going to give you ample opportunities to have some fun with it. I'm really not going to load up until we probably hit some of these lower support levels here, or when the MACD starts to turn a little bit more bullish. We usually don't have these MACD crossovers, everybody. If I go over here, we're looking at it right there. The last crossover is way over here. If you bought around here, you made some good money. If you bought around here, you made a little bit of money, but that's because the Dow Jones really didn't boost up as much. I think when we look at the NASDAQ here in a second, you guys are going to see that happen a lot more. Now here we're looking at Bitcoin and the NASDAQ. Kind of just another example of things not working out so well for us over the past few weeks. Remember, if you guys are watching traditional news, they're kind of still in the bull market mentality. It'll take a few weeks for them to kind of say, hey, what's going on? Why is this happening? Until then, they're going to be flippy-floppy every single day saying, oh my God, the market's going down forever today. Oh my God, the market's going up. Oh my gosh, the market's only going to go up from here, right? So for the NASDAQ, you guys can see another breakdown right here. We haven't broken down this low here, unlike the SPY. But remember, the SPY isn't breaking down out of this upward trend. It's still holding on barely. As far as the NASDAQ, we have one level of support right here between 14,557 and this Fibonacci level right here, kind of around 14,419 it looks like. If you guys are looking for a short-term dip and you guys think we're going to have some good earnings coming up for the second quarter, or second quarter earnings, going now, you guys are going to look to buy in this area right here only because mega cap tech has been explosive through earnings, okay? Only tech, okay? And you're going to hope that we consolidate and then break out sometime in late October. That's still a possibility if we have good earnings. So far, the market is rolling over just a tad right now. If you guys do not want to go with that, or earnings are not looking so good, you're not going to buy until about 13,500, which if you guys have been looking at tech, it went up very fast. It can come down very fast. People always seem to forget that just because something goes up really fast, that means there's actually not many support levels that have been built up on the way up. That's why we have consolidations. Those consolidations end up being beautiful levels of support, which is why we really don't have much support until here and here. And so if you guys are looking for something that's more of a Fibonacci level and a little bit of a moving average, if we move down over the next couple months downwards, which I think we most likely will, we're going to run into this Fibonacci level, but also at the really good time, the 50 and the 200 weekly moving averages. That's going to be very, very good. I don't think in the short term we are going to see the NASDAQ break all the way down back to like $12,000, $11,000, or even all the way to lows down here at 10,000. I don't think anything like that's happening, just like with the rest of the charts here. I think we're just looking at a pretty decently sized pullback because things got a little wild, and the market's like, oh wow, we bought this company, and the valuation is kind of extreme. It's not really worth this much, is it? And that's where the realization is coming in that says, hey, I can just pull out some, not all, I can pull out some of my money, and then I can put it into bonds. And those bonds or securities can make me some good money, and I'm just holding my cash in there, and I don't have to worry about it. Sometimes, we tend to overbuy, or people bought up here and now they're having some regrets because now we're breaking down below those levels of support. And you guys can see right here as well, MACD crossover happened a few weeks ago. You kind of drag this up. You see right here, this green one. You kind of open up some shorts over here. You're looking pretty good right now. MACD is working on this side. And of course, for Bitcoin, the MACD's been working on this side as well. This one's been a little bit more interesting as far as Bitcoin's concerned because we have had so much news on this one, especially when it comes to the SEC going after Binance, the SEC losing against Binance, XRP going up and exploding, securities laws being made by judges, a whole bunch of random crap out here right now. But the big thing here is you see this MACD, you see how we have lower highs, but at the same time we have higher highs over here. That's what you call a bearish divergence. That's not a good thing. It usually means the price of Bitcoin goes down. Now, lucky for us, we do have a strong level of support right here. We talked about that $25,000 level. If you guys bought, congrats, you guys have made some good money. Primarily with me, I'm going to start slowly acquiring more altcoins here because there's a chance that the regular market goes down, but Bitcoin can try to hold these levels and maybe even try to break back above into this overall channel around 29,500. Am I banking a lot of money on Bitcoin doing that? No. Primarily right now, I have more shorts on Bitcoin than longs, and those shorts are expecting us to tap onto this 50-week moving average here over the next, I want to say 2 to 3 weeks here. I'll be in Vegas by that time, so I won't be paying attention too much. But you see this death cross right there? Those golden crosses are very good. Golden crosses are usually very good for going up a little bit higher, but those death crosses are usually not very good. Death cross right there, what happened? Boom. Death cross coming right here, probably a boom. And then we have the 20 crossing down below the 50 here sometime in October, maybe late September. More October, I would say. We're going to be flushed back down to the low 20s here. As far as I'm concerned with Bitcoin, this is probably going to get a little bit sloppier here. I expect next week to kind of flush back down, unfortunately. And then we're just going to come back down here to support. Not break down below that support. That may happen, but I still think we're kind of a couple weeks away from that just because of how slow Bitcoin has been. I don't know if you guys have been noticing this. We really haven't been seeing those huge moves besides news events. I know we've really just been kind of going sideways for the last few weeks, which has really been boring if you guys haven't been paying attention. We are not looking at a crossover here. We've already had that crossover. It happened right around here. Then we had the breakdown a few weeks later. Easy MACD moves right here. For now, though, just pay attention. We have had that breakdown right there. The breakdown's already happened. From this point on, I'm waiting for Bitcoin to take that next breakdown down, next move down, breakdown, excuse me. And we're just coming around 22,000, 21,500. If I'm looking for Bitcoin, I know that seems like a long way to go, but that's where I really want to acquire a lot more crypto. I don't think without a recession, we're going to break this cycle of higher lows. A low, higher low, higher low. Break this one, but not this one over here, okay? Hope you guys all have a good rest of your day, and please check out our sponsor.
Today's video is sponsored by TapBit, a global cryptocurrency exchange that's been blowing up recently as Binance has been going downhill. Ever hunted for a specific token and just couldn't find it on other exchanges? Well, TapBit has got you covered. They feature hundreds of tokens for you to buy, trade, and explore. But what really sets TapBit apart? Speed and reliability. We're talking hundreds of thousands of transactions per second. So when you decide to sell, you can be confident you're getting the exact price you see on the screen. No surprises. And for my awesome viewers, TapBit is offering something you won't want to miss. Use my link in the description below and you'll get a whopping 10% back on your trades. Yep, you heard right, 10% back. So why wait? Head over to tapbit.com and make your crypto trading experience a smooth one.